Well, markets closing the day mixed as investors were dealt more Fed commentary that reiterates the higher for longer narrative. San Francisco Fed President Mary Daly assuring there is no urgency to adjust rates. For more on what the hawkish Fed stances mean for investors moving forward, let's welcome in Ross Mayfield, Baird investment strategy analyst. Hey, Ross, good to see you. So nothing here. I mean, there wasn't a clear direction in the markets today. Does it seem like people are sort of zooming in on this FedSpeak and just not expecting anything anytime soon?
Yeah, that's basically it. I mean, there's nothing that has really changed the narrative. Obviously, the market is also in waiting mode for big earnings, as you mentioned. So it is kind of, it reminds me a bit of a week where you have a CPI on Wednesday, or it's one of those first weeks of the month, and you're just kind of in waiting mode for the big news. Because in the meantime, you do have a lot of Fed speak, but not really saying anything new. No reason to be more hawkish, but no reason to be more dovish either. And you kind of settle in and higher for longer, maybe 2 rate cuts this year. And I think that's probably your base case as of today.
All right, so it's all about NVIDIA, but it's not all about NVIDIA. In fact, we've seen the rally breadth expanding to include other areas of the market, other AI themes like electrical demand, copper. We've been talking a lot about copper today. What do you see in terms of the market breadth and how that's been improving?
Yeah, absolutely. I think if anything, heading into the earnings, you kind of had tech kind of reset sentiment because it hasn't been the only show in town at the top of the market, right? You've had breadth expand. You've seen, some pop from something like utilities. You're definitely seeing things like financials and banks hang in there. Some of the more cyclical kind of historically valued tilt sectors, commodity linked, economically sensitive stuff has been working, while discretionary has taken a pause. So it's a bit more of a mixed market, but it is broader, and all things equal, you'll take more legs holding the chair up, right? And then if you look internationally, obviously the story expands there. There's breadth all over the place if you look abroad. So probably a good thing that heading into a big earnings like that, there's not this historic kind of concentration and high expectations for that sector. I think the breadth is very much a good thing here.
So Ross, bottom line, do you expect stocks to continue to move higher here?
I do. The momentum we saw off the October 23 lows, the breadth and momentum of that rally really historically portends strong intermediate term returns, right? Pretty much everything we saw from October, November, December, January, and on through really the dip in April is something that portends strong returns over, the next 12 months historically. So, we might wobble here as summer volume dries up and hit a bit of a seasonal rough patch. Maybe some additional volatility linked to the election pops up or something geopolitical in the meantime. But around this time next year, I would be hard pressed to not be bullish about that outlook, just based on what we've seen historically. Again, you're seeing it today. You had a bit of weakness in April, and all of a sudden we're right back at all-time highs. Breadth looks pretty good. Leadership is still cyclical, and the economy is hanging in there. So not too much to really scare me at this point.
And so you mentioned international is performing well. Is that a place that you would be looking above the U.S. right now, or are there sort of more opportunities, cheaper opportunities outside of the U.S.?
Definitely cheaper. I mean, valuation hasn't helped you much in international over the last decade. So I struggle to make that the kind of base case there, although there are plenty of value there. A lot of the aggregate PE being lower is just based on industry and sector mix. But there is a lot of opportunity. You are starting to see momentum as a lot of these countries both emerge from kind of mini recessions, the type of which was expected here and didn't materialize. But they're also, Europe and a lot of these big central banks are moving towards cuts or stimulus a little bit quicker than the Fed is, just because inflation has been coming down more rapidly there. So, I come from a wealth management world. We're always kind of fighting the home country bias. So I'm always a little bit of a bull for international, but there's a little bit more to the case than there usually is. And I think you're seeing a lot of momentum. The all world ex-US is plumbing new highs just alongside the Dow and the S&P. So some momentum, some economic, bottoming, and a lot to like abroad.
Yeah, you throw China in there, you could have a real party. We just got a minute left. Anything we didn't touch on here?
I think you very timely comment. I mean, China is kind of, the previous guest, 800-pound gorilla in the room. I mean, as of this time last year, we were talking about, is China investable, period. And now it seems to be carving out a base. There's reacceleration momentum. And, there's the state-owned enterprises, but there are still some good businesses there that obviously have, huge addressable markets and a lot of support. Obviously, they're pumping stimulus into the system this latest round. We'll see. It hasn't worked yet, but they haven't pulled the foot off the gas yet. So I think watching China, and as you talk about things like industrial metals and copper, it's hard not to link that with kind of a nascent, burgeoning China demand. So I think that's a big story over the rest of the year here.
Interesting. Thanks a lot, Ross. Appreciate it.
Thank you.